Hey everyone, we have a new IPO starting 4th October till 7th October. It's the IPO of Electronics Mart India Limited, a company that operates a chain of retail stores in electronics and consumer durable space. And there's already a lot of buzz with a grey market premium of nearly 50% for this IPO. The major reason is its very reasonable valuation. So after the IPO mania last year and sharp correction in IPO stocks this year, it seems the new IPO have learned the lesson and are listing the company at reasonable valuation. So as usual, we'll cover Electronics Mart business, future prospect, key risks and competitors, financials, and then IPO details along with valuation. Finally, we'll conclude if it is worth applying for the IPO or not. Electronics Mart India Limited was incorporated in 1980 as a sole proprietorship with a consumer durable and electronic space in Hyderabad under the name Bajaj Electronics. In last 40 plus years, company has grown into 112 stores as of August 22, out of which 100 stores are multi-brand outlets and 12 stores are exclusive brand outlets. Company offers a diversified range of products including your AC, TV, washing machine, refrigerators, mobiles, laptop, camera, kitchen appliances, home entertainment, etc. Their offering include more than 6,000 SKUs across product categories from more than 70 consumer durable and electronics brand. So basically, Electronics Mart is a retail company that doesn't manufacture its own products. It is a retailer with one-stop solution for all electronics and consumer durables where it sells products for all top brands including LG, Philips, Sony, Godrej, Voltas, Oppo, Vivo, OnePlus, Dell, Havells, Orient, etc. Today, company claims to be the 4th largest consumer durable and electronics retailer in India as of FY21. And it is the largest player in South India with dominance in Telangana and Andhra Pradesh. So if you are from Telangana or Andhra Pradesh, you might have seen the stores of Electronics Mart under the name Bajaj Electronics. Company is now also expanding with 8 stores in NCR region. If you look at the business model of the company operates in 3 channels: retail, wholesale and e-commerce. Within retail, it is a mix of ownership and lease rental model. As of August 22, out of total 112 stores Electronics Mart operate, 11 stores are owned, 93 stores are under long-term lease rental model and 8 stores are partly owned and partly leased. Electronics Mart is also engaged in the wholesale business of consumer durables where they supply products to single shop retailers in Andhra Pradesh and Telangana region. Then third channel is e-commerce that was set up in 2017 where they sell products on their website as well as on leading e-commerce platform. In FY22, company generated a revenue of 4,000 crore, out of which 91% revenue of the company was from retail business, 1.48% from wholesale and 0.92% from e-commerce. Company has a total of 9 large warehouses, out of which 6 warehouses are in Hyderabad, 1 warehouse is in Vijayawada and 2 warehouses in NCR region. Now in retail business, the biggest challenge is to offer the products at competitive price point to end consumer as well as maintain a good margin. And for that, you need to have a very efficient logistic network, a robust technological infrastructure and good inventory management, which is the backbone of the entire supply chain. Electronics Mart is so far able to maintain a consistent margin and has been able to take benefit of its scale to procure products at competitive rates. This is one of the key strengths of the company. In company's RHP report, it has mentioned that among all the organized players in the electronics and consumer durable space, EMI has second best operating margin. That shows company is so far running very efficiently. If you look at the leadership, Mr. Pawan Kumar Bajaj is the founder, promoter, chairman and MD of the company. He founded erstwhile sole proprietorship Bajaj Electronics in 1980 and has over 40 years of experience in retail business management. Pawan Bajaj's son, Mr. Karan Bajaj, is the CEO of the company and he has over 10 years of experience in retail business management. Now, as far as future growth is concerned, the future of electronics and consumer durable is very bright. It is a no-brainer. The demand for AC, TV, washing machine, refrigerator, mobile, laptop, camera, kitchen appliances, home entertainment would only going to increase. Simple reason is rising consumption in India. Consumption is one of the biggest theme in India for the next 20-30 years due to the population of 140 crore people and rising income and spending levels. There are still crores of people living in rural part that do not yet have access to electronics and consumer durable products. Plus, due to rising urbanization, there will be growing need for electronics and consumer durable even in the cities. Another important trend is growing share of organized retail in India. India has predominantly been an unorganized sector with small mom and pop stores selling products. However, organized retail is capturing more and more market share. As per CRISIL report, organized retail market share in overall retail market was 7.8% in FY12, that got increased to 8.9% in FY17, and currently it is 10 to 11% in FY22. And the latest market size is 70 to 72 trillion rupee. So clearly there's a good scope of growth for organized retail in India, which is expected to touch a market of 13 to 15% by FY27. To capture this growing market, Electronics Mart is planning to expand its reach across selected geographies and deepen its footprint in existing market. Basically, company follows a cluster-based approach wherein they expand their network in a particular market till they reach a substantial depth and scale. Such clusters lead to effective penetration in underserved market and concentrated brand visibility due to focused implementation of marketing and advertising initiative. For example, currently they have a good presence in Telangana and Andhra Pradesh, and now they are focusing on expanding into NCR region with plan to open 26 multi-brand outlets from current level of 8 outlets. If you look at the key risk, the biggest risk for Electronics Mart is intense competition. There is an intense competition in the electronics and consumer durable space from organized brick and mortar retailers such as Reliance Retail, Croma, etc. and unorganized retailers such as local electronic stores and others. On top of this, e-commerce giants like Amazon and Flipkart have been eating a lot of market of retail sector, especially in categories like mobile, TV, laptop, etc. If the e-commerce companies continue to gain market share, it can impact companies' business. And friends, try to understand this. Since Electronics Mart is not a manufacturer of electronics product, the entry barrier are quite low. It means, let's say you want a LG TV, then it won't really matter if you're buying it from Electronics Mart or Reliance Retail or Croma or local vendor or from online. You'll buy it from where you'll get the best price. So the entry barrier in this sector are basically the price point. You have to offer the best price for the product, and for that you need to have a tight control over your inventory management, logistic and efficient use of technology. Then another entry barrier is brand name. Since Electronics Mart is a well-known brand in the southern part, it gives them a benefit over competitor. But make sure that you understand this competitor risk before applying for the IPO. Then second risk is regional concentration. EMI generate major sales from Telangana and Andhra Pradesh that makes it vulnerable to adverse social, political or natural disaster. If you look at the revenue of the company, it has grown from 2,826 crore in FY19 to 3,179 crore, 3,270 crore to 4,353 crore in FY22. Interestingly, even during COVID, the company sales did not fall badly. Company's profits have grown from 77 crore to 103 crore. Although there was a dip in FY21 due to COVID. Its latest ROE for FY22 stood at 17.4% and ROCE at 19%. And operating margin stood at 6.4%, which is one of the best in the industry. Company has latest debt to equity of 0.75. Overall, the financials are looking decent. Not too good, not too bad. If you look at the IPO details, Electronics Mart IPO window is between 4th to 7th October and IPO price band is between 56 rupee to 59. Face value is rupees 10 per share and minimum investment is 14,986 rupee, with one lot having 254 share. IPO issue size is 500 crore, constituting fresh issue of up to 8.47 crore equity share. After the IPO, promoter holding would reduce from 100% to 78%. The money raised from the IPO would be utilized for funding of capital expenditure for expansion and opening of stores and warehouses, funding incremental working capital requirement, repayment of some borrowing and general corporate expense. At a higher price band of rupees 59, company would command a market cap of 2,270 crore. That would make it a very small cap company. As far as valuation is concerned, in FY22, company generated an EPS of 2.7 rupee that translates to a PE ratio of 21.8. Now that looks very interesting. The valuation on which the promoters are launching the IPO of Electronics Mart is looking very attractive. And that is the biggest reason why this company is also commanding a premium in grey market. So in this video, we discussed the IPO of Electronics Mart. If I quickly summarize, company is the 4th largest retailer of electronics and consumer durable in India. And the future of electronics and consumer durable is very bright. However, the only concern is intense competition from organized players as well as unorganized players in the sector. On top of that, the rising penetration of e-commerce giant is also eating the business of brick and mortar retailers. So ultimately, everything will boil down to competitive price, and for that, the most important factor would be inventory management and overall efficiency in terms of cost management. Retail segment is a low margin business. The major play is around the volume. Since Electronics Mart has a good scale of business, it has a better bargaining power to negotiate the price from brands and procure products at lower cost as compared to smaller retailers. However, as the company plans to grow, it would be important to maintain the margin. So for now, at current valuation, the company looks interesting and you may consider applying for the IPO for listing gain. As far as long-term investment is concerned, you need to keep an eye on the business performance and accordingly decide if you want to hold it for long-term or not. Everything will depend upon company's operating margin and profitability while maintaining the growth. Now tell me in the comments, are you going to apply for the IPO or not? And if you find the video useful, do like it and don't forget to subscribe the channel and press the bell icon to stay updated. Thanks for watching the video. Take care.